All right, so hey everyone, and welcome back to the deep dive. Today we're diving headfirst into a question that's probably on a lot of minds these days. We're talking inflation. Specifically in the US, is it just a blip on the radar, something temporary, or is this something we're going to be wrestling with for a while? It's a big question with some pretty significant implications, wouldn't you say?
Absolutely. And to help us unpack all of this, we've been digging into some recent analysis from the Tai Chien and Kindonia YouTube channel. There's this great back and forth between these two guys, Ah Long and Ah Tun, that really gets into the nitty-gritty of it all.
And that's exactly what we're here to do today. We're going to try to pull out the key insights from their conversation, look at the U.S. economic data, see what the Federal Reserve, the Fed, is up to, and even think about what all this might mean for, well, folks a little closer to home, especially in Vietnam.
Yeah, and one thing that really struck me was how often this word transitory keeps popping up.
Yeah.
You might remember that Fed Chair Jerome Powell was using it a while back, and now it's back in the mix as we try to figure out where monetary policy is headed. Makes you wonder what's really changed and what's maybe not so temporary after all.
Okay, so let's start by looking at some of those U.S. economic numbers. There seemed to be a real sense from Along and Anton that things might be, well, maybe not headed in the best direction. What stood out to you?
Well, one of the big things is that the FOMC, the folks who make decisions about interest rates, they've actually revised their expectations for GDP growth. They were initially looking at something like 2 to 2.3%, but now it's down to 1.6 to 1.7%. That's a pretty noticeable drop, isn't it? I mean, it seems like they're getting a little more maybe pessimistic going from one FOMC meeting to the next.
For sure. And they're not just adjusting their GDP outlook. Their inflation projections have also ticked up from like 2.5, 2.6% to 2.7, 2.8%. Now, Along and Antina pointed out that tariffs could be a big factor here. The thinking is that tariffs push up the prices of imported goods, and ultimately those costs get passed on to us, the consumers.
Right. And we can't forget that inflation actually hit almost 5% at the beginning of 2022. That's what really kicked off the Fed's interest rate hikes in the first place. They're trying to steer that inflation rate back down to their 2% target. But here's the thing that Anlong and Atun were emphasizing. It's not just about the current level, it's about the momentum. Even if it's lower than that 5% peak, if inflation keeps creeping upwards, that's a real worry for
It's
policymakers.
a tough situation all around. And to make things even more complex, unemployment is expected to rise too. They're now looking at 4.4, 4.5% instead of the previous 4.2, 4.3%. And the conversation even touched on how AI, like those new, cheaper AI models, might be starting to shake things up in the job market.
Yeah, it's a whole bunch of moving pieces. When you put it all together, you've got slowing GDP growth, inflation that might not be as transitory as we'd like, and unemployment on the rise. It's no wonder those U.S. policymakers are feeling the pressure. Tough decisions to be made.
Speaking of transitory, that's a word we've been hearing a lot lately, and it's definitely a loaded term, especially given its history. Can you walk us back a bit? Why is transitory so important in this whole inflation debate?
Well, you really have to go back to, I think it was around May 2021 when Fed Chair Powell was using transitory almost constantly. Remember, that was right in the thick of things with COVID-19 and the beginning of the Russia-Ukraine war. Global supply chains were getting slammed. The idea was that, once those disruptions eased, inflation would cool down too. It would be transitory.
And of course, as we all know now, inflation didn't exactly turn out to be so temporary. It actually spiked pretty dramatically, which, well, led to a lot of people questioning whether the Fed was a little slow to react with those rate hikes. So, yeah, anytime transitory comes up now, it's definitely got some baggage attached.
And here's another thing to consider. The context has completely changed. Back in May 2021, the Fed funds rate was practically zero. Now it's somewhere around 4%. That's a huge difference. It changes the whole dynamic. Any inflationary pressures we see now, they're playing out on a very different field.
Makes you think, too, about the human side of all this. After that whole transitory miscalculation, you can bet the Fed is going to be extra cautious this time around. They don't want a repeat performance, even if there are some signs that things might be easing up a bit.
And it's not just about economic theory, is it? There's a whole political dimension to this as well. And Wang and Anton even talked about how, back when Trump was president, it was almost like this game of chess between him and Fed Chair Powell. Trump had his fiscal policy moves, Powell had his control over interest rates.
Exactly. They brought up this interesting social media post from Trump where he was talking about Liberation Day in America and how the Fed should cut rates before those U.S. tariffs really start biting. It almost sounded like a threat, like, hey, if you don't cut rates, those tariffs are going to get even worse.
So you've got these two opposing forces, right? Trump, at least from what we can tell, seemed to be okay with, maybe even hoping for, a bit of a jump in inflation. He probably figured that would force the Fed's hand, make them lower rates. But the Fed, well, they're playing it safe, hoping that inflation really will be temporary this time and trying to avoid any rash moves that could make things worse.
And it's worth remembering that the U.S. central bank is designed to be independent. Those governors, including the Fed chair, they're appointed for fixed terms. It's meant to keep monetary policy decisions, at least in theory, somewhat insulated from political pressures. But as we're seeing, it doesn't mean that politics doesn't play a role. It can get messy.
Now, here's something to ponder. Anlin Long and Anatun suggested that maybe Trump's strategy, if you were to get a second term, would be to really front load the economic pain, hit the economy hard early on with tariffs, spending cuts, immigration reductions, all that stuff. The idea being that would pressure the Fed to slash rates. Then, maybe 2.5, 3 years down the line, you start to see some positive results. Risky move for sure.
And a move with some potentially serious global consequences, especially for a country like Vietnam. They were talking about how Vietnam has a huge trade surplus with the U.S., probably the third largest. If those U.S. tariffs really ramp up, well, that could spell trouble for the Vietnamese economy.
But here's the good news. Apparently, the Vietnamese prime minister has actually spoken about the need to be prepared for this kind of global economic uncertainty. It's good to see that they're, trying to anticipate and get ready for potential shocks. That's smart thinking in this globalized world.
It all goes back to that uncertainty, doesn't it? Nobody knows for sure what's going to happen with those U.S. tariffs. Anna Long and Anton made a good point, though. Keep a close eye on the U.S. stock market and pay attention to the news, especially as we get closer to April. That might give us some early clues about what to expect.
Now, if we shift gears and talk about the Fed's moves, the video noted that the Fed funds rate actually stayed the same between the last two FOMC meetings. So at least for now, it looks like things are holding steady on the interest rate front.
But here's the thing. It sounds like expectations about those future rate cuts are changing. Remember earlier when we were talking about how people were expecting those rates to come down quickly? Well, that doesn't seem so certain anymore. It looks like rates are going to stay higher for longer, mostly because of that stubborn inflation we've been talking about.
Right. Initially, some folks were predicting 3 rate cuts this year. Now, 2 cuts seems to be the more common view. But of course, it all hinges on what happens with inflation. Those Fed folks, they're data-driven. If the numbers tell a different story, they're going to adjust their plans.
And that's where things get really tricky. What if inflation doesn't cooperate? What if it keeps going up and the Fed is actually forced to raise rates even more? And Long and Anton brought up a really important point. That could put a real damper on the economy, something we need to keep in mind.
As they were talking about all this forecasting and predictions, they even made this kind of funny comment about how even the Fed chair, the guy with all the data and expertise, even he got it wrong with that whole transitory inflation thing. Kind of a reminder that predicting the economy is a tough business. There are always surprises.
Which means we all need to be flexible, right?
Right.
Governments, businesses, individuals. This world is changing fast, especially with things like AI constantly shaking things up. We need to be ready to adapt.
So to wrap things up, I think the big takeaway here is that this whole debate about whether U.S. inflation is a passing phase or something more permanent, well, it's not over yet. We're seeing mixed signals from the economic data, potential shifts in trade policy, and a Fed that's clearly treading carefully.
And let's not forget that historical context. This isn't 2021 anymore. The economy looks totally different now. Makes things even more complicated.
And for those of you listening in, especially from Vietnam, remember that what happens in the U.S. economy doesn't stay in the U.S. economy. The U.S. and Vietnam have a close trading relationship, so any big policy changes in Washington could have ripple effects that reach all the way over here. We're all connected.
So here's something to leave you with. Given all this uncertainty, how are you preparing for different economic possibilities? What are you going to be watching closely in the next few months to get a sense of where things are headed? It's something to think about, especially in times like these, when things can change so quickly.